What's up, guys? I'm just creating a short little video on the indicators that I like to use. I'll share with you guys the links to these indicators. I believe that every trader has his own indicators. Some don't like to use any at all. I don't always keep these on my chart, but they're just utilized for some sort of conviction. So going to the first one is this SSS 50%. It's pretty cool just because it marks off the different time frames, 50% and highs and lows. It just makes it easier to keep track of in case you're not wanting to draw a whole bunch of lines on your chart. The reason why I use this is because institutions also or often take price back to 50% of a range, and it's important to keep track of where those ranges are to me. And this is often called the equilibrium of a price range. Significant for several reasons. It's considered one of the fair value zone. It's where buyers or sellers have previously agreed on price before an imbalance led to an expansion. And when prices return to this level, it's testing whether the original breakout or breakdown is valid. So, and oftentimes it serves as a psychological level. So getting above the previous month high, that's considered bullish to a standpoint. And then getting above previous day high, that's important. It's like, oh, we're above previous day high. So stuff like that, that's important to me. And yeah, and we'll get into the next one is the VIX Heatmap. Now, this one is pretty cool. It's pretty simple. I use the VIX just to measure whether how much fear and greed there is in the market. So, like I said, I don't always use the indicators. Like oftentimes I'll just turn these off and on so you won't see me have them up. But the obviously the lower the VIX, the more bullish we are, or the more greed there is on an intraday level. So it's important for me to keep track of this. And then, like for example, if we expand, VIX gets really high, VIX 32, we get a lot more fear going into the market. So, for example, I think right here for at one point we were cooling off. I think that what was this Friday? Yeah, we were cooling off. We were creating the wick of the day. So I think price opened up right here. We expanded to the upside and then came right back down. And then VIX started turning green again. So, and then also, 6,000 right here is a psychological level. Getting below that's pretty pretty important. So next one is Killzones. I like to just keep track of Killzones, where we are, and just on different time frames. I'm not always looking down here. Sometimes my mind gets tunnel visioned and stuff like that. So we know the New York AM session is the expansion session. And yeah, I just want to keep track of the highs and lows of the London or the previous days, New York PM session and so on. I value the highs and lows as important areas of liquidity in which price might respect, and I would like to pay attention to how price responds to the highs and lows of these kill zones. Now, kill zones are just where market participants are active. And then VWAP keeping it pretty simple. Institutions often wait for price or bring price into this area, and how price responds to VWAP is important because institutions value VWAP as fair value. And for example, if price is constantly rejecting or staying below VWAP, in my mind that is considered bearish. It's conviction for bearish downside. And yeah, and especially when they're stuck in a range. I want to see how, like, if we're stuck range all day, I would like to see if maybe if we're like bouncing off of it. That would tell me like, okay, buyers are present every single time, or if price rejects it, sellers are present, and then that would tell me that institutions kind of want to take this lower. even though that, we're stuck in that tight range. The super order blocks is cool. Don't like to have this one up either just because it's a whole lot of clutter, but every now and then if I'm just looking at a clean chart, just want to see where my PD arrays are at just because I might overlook something. I don't think that, every person is going to catch every little thing. There's a lot of things to pay attention to for conviction here. So, for example, in this 3-minute 3-minute one, we have fair value gap here. We see, price wicked into that and then expanded up through it. And then we get an order block here. Price came into this area, respected it, expanded back up, buyers are present, and then came back down, and then buyers are present. So we have these, every single time these order blocks are mitigated, they turn yellow. And that is just something that we can adjust here. So we can plot our order blocks, turn that off, turn that on, turn on the custom mitigated order block. Just shows that, that order block has been used. And ICT oftentimes believes that, PD arrays, which are just fair value gaps and order blocks, are just one-time use. So keep track of those. And then fair value gaps, we can highlight the mitigated fair value gaps. But yeah, and then there's one more that I really like. It's the, let me try to remember real quick. I think it's the VIX. Okay, yeah, I only got the essential version. So I don't really need that many indicators. I don't like to have too many. Whoops, not that one. I already have that one. So I like this one just because it helps me identify where bottoms are at. Not really sure how this indicator works, but I know it is a correlation to VIX. I think it is correlated to the volume of the VIX, and I might be completely wrong, so don't quote it on me. You know, even if you take a read into, like, what is it, the about this script, all it is good at identifying bottoms. So every single time this green bar will pop up, I don't know what is that being measured off of. I'm assuming volume of the VIX, and oftentimes you'll see this green bar before the bottom is made, which is very nice. It's pretty accurate from what I've seen so far. It says I customize the settings slightly to create percentile based highlight bars, and he doesn't even go into description about this or how he uses it. So, but it's pretty simple in my opinion either way. We see that we get the sell off here, and the minute we stop creating these green bars, price expands, just slightly. This one's a pretty hard example, just in my opinion. We've been in a bearish trend all week. So those, let's see, even this one, right? So this one, green bars are made, a little bit of expansion. Green bars are made, sell off, we're turning green right here, expansion to the upside. So bottom, then small little bottom, come back in, come back down. So this can add some sort of confluence. Obviously, if we're in a bearish trend, that's why it's important to look at everything from a higher time frame, because indicators aren't gonna do everything for you. So understanding how to read price action is going to help you as well. Even though this is a bottom, does not mean that we're going to get a reversal, right? So bottom, it's just used for conviction. That's all it is. Anyways, I'll leave a link to this. If you guys have any questions, let me know.